Hey, folks. So, rough week for mortgage and housing. We had a CPI print on Thursday showing the highest or hottest rate of inflation in 40 years, running 7.5% headline inflation. And if that were not enough, in the middle of the day, it prompted Fed President Bullard to come out and say he'd like to see and would vote for a 1% increase to the Fed funds rate by July. So about a week and a half ago, 2 weeks ago, there was a chance of a rate hike, just a one rate hike, 25 basis points. It wasn't even baked in. It was a little more than 50%. Then it moved to about 50% rate hike of either a 25 basis point hike to a 50. Now, as you can see up on the screen, there's virtually a 100% chance of a 50 basis point hike come March. So how fast things change. So what this has done is created just complete chaos in the both the bond market and the stock market. We're seeing a 10-year note move up over 2%. The 2-year note, okay, something we're watching closely, that is spiking unbelievably. In fact, I'll show you a chart here. You could see this is the 2-year versus the 10, and the spread here is narrowing. It shows 58 basis points. As of yesterday. It's actually 40 something basis points. And one of the takeaways and the quandary and the conundrum that the Fed is in is look every time the 2-year note and the 10-year note get about equal. The gray shaded areas are recessions, and this is going back, 50 years. Not a lot of good outcomes when the 2-year note goes to um, par. So this 58, it's dropping, and the idea that the Fed's going to hike further and further and further, the stock market's having a tough time with it because it feels like the Fed will overdo it, and if maybe put us into a slowdown as soon as next year. So tough times. Now, next week we have some important numbers, and this stuff can change. Part of what the trouble is in our space is that the Fed hasn't given us a clear path as to what the monetary policy is going to be, and the data continues to determine that, and the data is creating a lot of headline risk, and it comes back again next week. We have some housing numbers, and we have retail sales, and we're going to find out next week if the higher prices that we're seeing in inflation are finally putting a dent in the consumer. If it does, it's going to make for some even more weird times. So I hope this finds you well. There will be better days ahead. Obviously, we're getting the reopenings of economies around the country, and that's going to maybe that'll help with consumer confidence and consumer sentiment, which is already starting to decline. But this is a really tough little market that we're in right now, and seeing the 10-year note over 2% with inflation high probably means that it's going to remain above 2% for some time until or unless the Fed overdoes the rate hikes like it did back in 2018. Hope this finds you well. Have a great day and a great weekend. We'll talk to you soon. Bye for now.